Good morning, traders. It's 8 a.m. Chicago time on Wednesday, the 2nd of August, 2023. This is episode number 2514. Just a quick reminder that there was no trader bite yesterday. Just not feeling well. I haven't been feeling well. And so, don't want to force it too much. Today, there's some important stuff going on here, and I wanted to kind of do one more before I left on vacation, which starts this evening. I leave on vacation, catching a flight at 8 p.m. out of O'Hare tonight, and I'm going to be gone tomorrow through next Friday. So tomorrow through next Friday, no trader bites. I will not be participating in the market, just shutting it completely down. Hopefully you'll come back on the morning of the 14th, August 14th, to look back at what the market has done, to catch up on the narrative with me, and to start to resume picking up the plan. Hang on one second, I forgot to post in the Convergent chat room. All right, so that's that. Let's take a look at what's going on in the market here through our Convergent Trading pre-market summary sheet. If I'm taking pauses, just bear with me here. I just got to. I'm dealing with a lot of nausea, and so every once in a while I need to kind of pause for a second to just take a breath. But overall, the market today, this morning, coming in, is showing risk-off sentiment. The overnight posture is risk-off. The main focus here is that Fitch cut the bond rating for the U.S. from AAA to AA plus. Now, in the real world, this doesn't really have any implications, right? There's nothing that is triggered. There's no change. Nobody's got to sell U.S. Treasuries or anything like that. Nothing really changes. But the way it looks to me, and from the several resources I use for macro, the market is really has reached some pretty high valuations over the last month or so, and just any news is cause for people to just hit the take profit button, and that's probably what we saw overnight. But please understand that the gap down that happened yesterday was on news, so there is an SOC associated. The SOC for this news is settlement. That's where the market finished the auction the night before, not the close, but settlement. That's where the market officially set the price for whatever product you're trading, and money changed hands. Money changed hands overnight, and that becomes our SOC. So that's where we stand. But the Fitch news, as you know, these rating agencies got a lot of scrutiny as a result of the big recession in 2008, 2009. So they do have an impact, but it's not expected to be lasting. U.S. MBA mortgage applications lower than previous. U.S. ADP employment change higher than expected. This gives me an opportunity to remind you that the non-farm payrolls are this Friday. ADP employment came in at 324,000 versus 189,000 consensus, so pretty strong, almost doubling that number. And then we have unemployment on Fridays. AMD plans AI chip debut by end of year. What's left for today in terms of higher tier releases? We do have crude oil stock, the EIA crude oil stock change, expecting a draw of 1.367 million. The draw last time was similar in expectation, but it only came out at a draw of 600,000 barrels. Still, crude is pushing higher, has been pushing higher. We're expecting a EIA gasoline stock change at 10:30, expecting a draw of 1.3 million. And then this evening, balance of trade out of Australia is expected to come out at 11 billion plus 11 billion surplus in Australian dollars. And then China's Caixin Services PMI expected at 52.5, and that's expected to come out at 9:45 Eastern U.S. time. Okay, so that's where that stands. S&P, turning our attention to the S&P. The S&P is in a multi-distribution profile. It's definitely explored the range quite well. We're seeing a pretty decent excess down at the lows with 363,000 contracts traded, putting us above what we would consider normal, the edge of normal, which is 300,000. So pay attention here. Clearly, the S&P has a lot of interest this morning. The inventory is 100% short because of the gap down, meaning the entire amount, the 363,000 traded, all of it traded below the prior close. The range is 41.25 points, which is pretty decent, and the point of control is shifted dramatically lower at 45.80 this morning. Let's take a look at the S&P here. The big picture. This is the market profile, big picture kind of chart that I'm using. The square that you see in front of you, or the rectangle you see in front of you, are the edges of balance as defined by an earlier high, a low without an excess, and then cutting through that was it Thursday sell-off, that bearish engulfing sell-off on Thursday. We kind of poked through Friday. We poked through again on Monday. But yesterday we started to see the market. And what's important here is we have two distributions in this zone, in this balance zone. We have two distributions that look like that. And yesterday went right into the composite low volume node and pushed through by a little bit. The lower distribution, the number down here, if you recall, is 45.84. This is an important number looking ahead. The idea after Friday's trade incoming into yesterday is that we have likely put in a temporary top where we are likely to move and retest the lower boundary of this auction, which consists of all of these days here that I'm marking. And the idea is it's likely to work itself back to 45.84. And what it did that overnight, it pushed overnight down into 45.52.25, which was below the Thursday low. And the upper boundary is right on top of the low volume nodes, separating the two distributions. So in the overnight session, as it pushed higher, it got to 93.50 with the low volume node, the microcomposite low volume node, or MCLVN as we like to call it. That became the supply line for the overnight session. So we are down here currently. We have crossed through these single prints and are in the lower boundary of that Thursday. So this area here has been relatively thin, carrying from back here to an excess down here. This area here has pretty poor structure, and the expectation is we are likely to test it, to check it, and that's what we're doing today. So any test, so what does that mean? That means we open down here today. Any response back to 45.84 makes this test really important, and then the extension into yesterday's low versus the low of last Friday, and so on. This whole area up here in the 45.88 to 93 zone, this zone in here is expected to be a supply zone. So any push up here, I'm going to be looking to lean short on a failed push higher. Any push lower is likely to check or recheck the low of Thursday. But we also have the overnight stat here at 45.52. So the expectation is that it'll probably struggle in the 60 area. 60 comes to us from way back here. 65 and 60, 65, 60. That's these tops here. We've talked about this area before, and we are trading right on top of it. So very tough to tell. Very tough to tell what it's likely to do from here. But here's the most important thing. The most important thing is that there's an SOC in play. Does everybody know what that is? Hopefully you know what an SOC is. There is news in play, and that news occurred from the 46.01 quarter, and we have gapped, and we have this huge gap down below of about 33 points or so. So if I had a gun to my head and I had to guess, the most likely pattern this morning for a normal auction is to open, test the low, test this excess, and then turn back up and work itself to the single prints and work itself to the overnight high stat, and then back to settlement. The problem is settlement is so far away, 35 points. The stats don't really support a settlement test today. The probability of a settlement test today is relatively low, based simply on the range from the gap zone. But this is the most likely pattern that we've experienced some news. The market's likely to test, push lower. Folks come in and they liquidate on the news, late liquidations, and then the market starts to kind of walk itself up again, walk itself to the single prints that we have open in the ES, and then push through the low volume node, having tested the 84 in between this MC point of control. It's not going to be a straight line. It's likely to be a very contested push higher, and then settlement would be on deck. The secondary scenario is an open that squeezes higher back into the 84, and then we get ourselves an impulse down that then struggles to push back, and then that opens up the overnight stat at 45.52 and squeezes us into the mid-century figure down here. The levels down here that are of interest are 60 and 65 from way back. 60 and 65 from the middle of July or so. So this is the secondary scenario. Looking at the NASDAQ, same story basically. If you look at the NASDAQ, it also has two distributions. It's not as pronounced as the S&Ps are, but we do have two clear distributions. The NASDAQ has pushed down to 15,590, has pushed up to 15,789, and is trading below the mid at this point. The NASDAQ is expected to have a responsive push back into the 716 area. 716, potentially go into the excess from yesterday a little bit, and then pull back and go sideways. That's the main idea behind the NASDAQ. Why aren't we pushing the NASDAQ back to settlement? The NASDAQ is relatively weaker. As you can tell, this high from last Thursday actually belongs way up here in the NASDAQ, and it couldn't print it that high. The secondary scenario is if it doesn't turn in this 716, 725 area, then you've got a gap to settle. So open, push to 17, 16, 17, 20, that area, pull back, push through, and then squeeze into prior settlement, and that brings us to yesterday's auction. The third play is to open, push up into the 16 to 20 area, and then have an impulse down, and then come down for the overnight stat test at 590, and then at this point it starts to challenge this 550 area. This 550 area becomes the key target. That's your MC high volume node in this region. So that would be scenario 3 in this case. Those are the 3 plays, and it's just a matter of now of waiting for the market, whatever market you're trading, waiting for it to open, decide how much strength it has on the buy side or the weak side, the buy side or the weak side, and then trading on a retest of that is how I approach this. So I start to look at price action and things like that as we come into these key areas that I'm highlighting. The crude just keeps putting in these highs. It just did this morning. It squeezed the high by a little bit farther to 94 from 91, but overall it looks like balance with yesterday. So we have a gap up yesterday, closed the gap very nicely, ended up pushing right to this double TPO. Remember this double TPO high right here? That's at 60. It pushed to 59 yesterday. Beautifully done. And then squeezes right back into the point of control. You see how methodical that is? This morning it opened on the high end and is pulling back into settlement. It is testing value high and it's pushing back into settlement. I'm expecting it to continue lower into 24 here, and then it does what it does. But in general, crude looks like it's trying to go into balance here between 82 and 80.75. This is the range that it's playing in currently. I'll leave you with that. Thanks for tuning in. I want to remind you again that I'm away on vacation starting this evening, flying out this evening, and I will be gone, and there will not be a Trader Bite every day until the 11th. I'll see you back here on the 14th. Do your own homework, check your own homework, and then see how it relates to the market. And then we'll come back and we'll catch up on what has happened, and then work forward as we've done for the last 10 years. Take care.